Okay, good afternoon, everyone. So, welcome back in our session in today's lesson about Business International. So, in this session, we'll be talking about international financial management. So, talking about the financial thing. Last meeting, exactly last week, we were talking about operational. So, how we manage our operation in international situation. And in this week, we'll be talking about the financial management. So, how we manage our finance if our company is an international company or we operate in international situation. So, in this session, we will learn about international financial management. We will look at some of the introduction about this, and then after that, we will look at the 6 key tasks in international financial management. So this is the 6 key tasks for the manager of international financial of a company. Okay, let's get started. So a little bit of introduction here. International financial management is the management of financial activities of an organization in international situation. So again, this is happening in international situations. So it's financial activities. Financial activities could include many things like, for example, managing our company's budget. So it's talking about company's money. So how we manage the company's money to, for example, budgeting for a specific project, or how to raise some financial supports or funds from many other sources. So these are the financial activities, and it's all happening in international situation. Mostly the activities include like share stocks, like in this picture, or something like currency in many different countries, because the companies is operating in international situation, means they are operating within more than one countries. So talking about more currencies in here. And then this financial management is very challenging for many multinational companies. Why? Because the international managers, the international financial managers, have to raise funds. So this is one of the activities of financial activities, raising funds in financial markets for the firm's day-to-day activities as well as future activities to help maximize company value and profit. Why it is also challenging? Not only because the rising funds is happening in worldwide markets, but also because, like I said before, we're talking about different currencies within different countries. So the managers need to know, need to handle some of the currency problems that may happen in the future, or that may happen at the current situation. That's why it is pretty challenging for many multinational companies. And so the 6 key tasks in international financial management are, first, choose a capital structure. So for the managers of international financial of a company, they are responsible to choose a capital structure. What does it mean, a capital structure? It's choosing a capital structure. It means you determine the ideal long-term mix of debt versus equity financing. So the managers will decide which long-term financing will be used. Will be used debt or equity financing strategy. And then the second one will be raising funds for the firm. Of course, the managers will need to know, and we need to acquire equity or debt or intra-corporate financing to fund activities and investments of the company, of the firm. We'll be talking about all of these later in more details. I'm just going to give you some short, brief explanation here. So the third task for the managers is working capital and cash flow management. So how the managers manage the cash flow after acquiring the funds, and how the managers control the working capital. So to manage funds passing in and out of the firm's value adding activities. So the activities should add value to the company, to the firms. And then the fourth task is capital budgeting. So it simply means we budget the capital for specific investment projects. For example, foreign market expansion or foreign market entry in a specific country. So how the managers manage the budget, do the budgeting from the capital. And then the fifth is managing currency risk. Of course, in international situation, there are many currency within the operation or the activities, and therefore the managers need to know how to manage the risk of every currency situation. So multiple currency transactions of the firm and the exposure of exchange rate fluctuations, because we all know the exchange currency fluctuates in many situations and in many times. Therefore, the managers need to know how to manage the risk. And the last one is how to manage the diversity of international accounting and the tax practices. So the managers will need to learn how to operate in a global environment with diverse accounting practices and international tax regimes.